Hadia Saroya. I'm a freshman at the Lahore University of Management Sciences with an intended econ math major. Aliza, would you like to introduce yourself?
Yeah, thank you, Hadia. Hi, guys. I'm Aliza Sultan. I'm also a sophomore in HSS, and my intended major is also economics.
Got it. Kalsoom, we'd like to introduce you a little bit.
Sure. You want me to introduce myself?
Sure.
Sure.
Please go ahead.
Okay. Hi, everybody. I'm Kalsoom. I am the co-founder and general partner of IDI Ventures. We are an early stage venture capital fund for Pakistan. I also have been the founder of our sister company, Invest to Innovate, which has been a player in the startup space in Pakistan since 2011.
All right. And Kalsoom, you've also been, you've been quite vocal about, the startup space in Pakistan and as well as social issues in Pakistan. Would you like to talk a little bit about that?
Sure. Yeah, I mean, that's a pretty big question. So I think in terms of the startup space, I've been kind of had a front row seat in terms of helping to build it for the last 10 years. And obviously not the only player. It is such a village it takes to kind of get us to where we are today. So yeah, I mean, I think the things that I've been really vocal about have been, holding ourselves as well as others accountable for the value that we are providing startups and founders in the startup space. I've been vocal about the policy regulations that have held startups back. That's actually improved quite significantly right now. And that's also been because players like us have been on working groups working with these policy bodies. But yeah, I think that we still have a ways to go. I've also been, one of Misbah, my partner, and I are the only women general partners in Pakistan. So I think it is important for us to play a role in helping to move the needle as well. And it's something that we're really mindful of in terms of the fact that only 3% of female founded companies in Pakistan, not co-founded, so not mixed gender, but female fully founded companies have actually raised funding. And so for us, even though at IDI Ventures, we don't only invest in female founded or co-founded companies, we do take that responsibility very hard. And so we make sure that we're much more activist about our pipeline. We work closely with our sister company on a lot of the initiatives that are going on there to help female-led companies raising capital. Yeah, I think I probably live my life as a daily activist, but those are probably the big issues that I'm probably the most vocal about.
All right. So Kalsoom, you actually graduated from the University of Virginia with a bachelor's in Middle Eastern Studies, right? Mm-hmm. And then you went on to do your master's in, international, conflict resolution. So this is very different from the career path that you've chosen now. Mm-hmm. And, you did mention that you felt as if your ideas were not being appreciated in that sort of foreign policy sort of ecosystem, and that's why you changed your line. So can you talk a little bit about maybe the value of having our ideas appreciated? And right, yeah, could you talk a bit about that?
Sure. Yeah, I mean, I think I wouldn't say that I went down the eye to eye path because my ideas weren't appreciated, but I would say, so first of all, I mean, I think, I'm probably one example of many people that have not had a linear path to where they are today. And so I think for, obviously a lot of other LUMS kids that are listening to this podcast, I think we always think that when we graduate from university, we have our lives figured out. And I don't think you have to. It's okay. I thought I did. I graduated from college and went straight to graduate school. I really, from literally my first day at UVA, I thought my career was going to be in foreign policy. That was my first class I took. I was obsessive about it. That's pretty much until I could no longer take politics classes. I was taking politics classes. And then I went on, to do a master's in conflict resolution. I was focusing, this was a long time ago. So I'm aging myself to the Gen Z audience here. I'm an elder millennial. So I graduated soon after the Iraq and Afghanistan wars started, right? So I actually, when I was working, started out my career mostly in counterterrorism work. And that's really where my, for me, that was the opposite of my master's degree in conflict resolution. But I was like, this is, I was an international student studying in the US. I needed a visa. So that was what it took for me to work there. And that's also where I thought I would have an influence, right? Especially as a Muslim living in America, a Pakistani living in America. I was like, this is where my voice will probably be heard. And I think what's interesting is that, obviously I was like 20, at that point, I was 23, 24 years old. I was young, and I think it's a totally different generation right now, to be honest. But back then, I was one of the only female analysts in my division. It was a very misogynistic atmosphere. I didn't love my job, but I was there. I had a visa, so I thought this was the only way I could stay. And then I think that rather than thinking about it as eye to eye was the next thing, because actually eye to eye didn't happen for another 5 years. I ended up finding a voice while I was at this job by night. So I started when I guess would be the equivalent of a podcast back then, was starting a blog, right? And I started a blog on Pakistan that covered the things that we weren't reading or talking about Pakistan. So not just highlighting the bad news that everyone hears about, but also the amazing human beings that are in this country, right? And so that gave me the sense of voice, right? And so it's not that I wasn't listened to, but the way that I discovered that voice was by writing by night. And that blog ended up taking off. I ended up interviewing for like a few outlets. Like I was speaking for the BBC on different topics. I was writing for the Washington Post, and realized that I didn't have to this pathway was not the only pathway for me. And then in writing this blog by night, I switched day jobs, everything. But that blog was one of the first, I guess, steps towards me starting to really see the potential of countries like Pakistan. And that's, one thing when I started Eye to Eye, it was really based on the belief that the next great innovators and next great entrepreneurs aren't coming from Silicon Valley. They're coming from places like Pakistan. And a lot of that initial discovery was by what I was writing. And so yeah, it was not a linear path to get here, but I think for me, it was always about finding purpose in everything. And so that's kind of what started to etch the steps towards this.
I mean, that's really reassuring that you finally found your path, because at my age, I frankly do not know where life will take me, right?
Yeah. There's something beautiful about that. So let there be a question mark.
Absolutely.
So do you think in finding your this voice and in being able to articulate your ideas through your blog, you that's the sense of empowerment you also get through Eye to Eye and are able to give to other entrepreneurs or startup founders? Or do you think it's different when you're in that field?
It's really similar. I think you end up owning, similar to starting your own podcast, starting a Substack newsletter or whatever. It's more of a past. I mean, you're putting stuff out there, right? Versus I think when in this job, it is very much, it's to be your own boss. It's comes with its own evils, of course, but, and we can talk more about that, but I think that it is kind of a similar vein. And I think I kind of realized as I was working there, as I was running that by night, I was still working by day, right? I was still earning a paycheck. It wasn't, I think, for another 4 or 5 years until I started Eye to Eye. But yeah, I definitely love this concept of feeling like, this is something that I own, and also empowering others to feel like they can own that story as well, I think is definitely, a common theme between both. I think there's definitely a lot of evils that you don't realize when starting your own thing, that I've discovered when I started Eye to Eye, and then obviously starting a fund is its own new baby, and then helping other people start companies. Yeah, similar though.
I was just going to say, it's really cool that became sort of a launch pad for you, because I think there's a lot of opportunities that people get and they take them, but they just don't know how to use them for long-term benefit or benefit that has more of an external impact as opposed to just individualistic. So you've probably,
well, I don't think people have to have, that's the thing. I think a lot of people start things because they want to have this enormous impact. And I think that that's not always a right way to go about it, because I feel like it's overwhelming to be like, I'm going to change the world by this podcast, right? Versus this is my intention. I want people to hear a different voice or view of what's happening. And I think if you go into it authentically every single day, and it takes consistency, right? I wrote every single day for like years. Like I can't even imagine doing that now, right? And back at the time, I was literally like writing all the time. And it really does come down to that, right? If I only had that vision that I wanted to do something big, it doesn't always translate, right? But I think at the end of the day, and I always think about, some of my biggest role models in the world are people that really showed it through consistency, and consistency is actually what matters. And it's about the hard work that goes into it. And I think even with Eye to Eye, right? Like the sister company, we would not be here where we are today. Like we're working with, programs and entrepreneurs across the world right now. Like we would not be there if it wasn't for that daily consistency, which is the hard work, right? And also like constantly questioning yourself and being like, am I actually doing it as well as I should be? Asking like your entrepreneurs for feedback. I think those are the things that matter. And so I think people can get overwhelmed by a large big picture thing versus actually just saying like, I'm doing it because I love it. And like, and if I'm authentically attacking it every single day with that same sense of passion and intention, you're going to achieve something. And I think if you also say that you don't have to, it doesn't always have to be linear, that path, right? There could be an opportunity that comes up because someone recognizes something else in you that you were not even predicting. You could just say yes to that, right? So I always think about this idea of like, say yes to every opportunity and just try different things and see what sticks. And don't be afraid to also say no sometimes if you don't feel like it hits to your core. But yeah. I feel like I'm this like old lady, like a dadi that's like telling people.
This is very insightful. It's also nice, like when you're in the hostel and stuff, it's nice to hear someone guiding you a little. So this will be very useful to all of us as well, eventually.
Sure.
Accelerators generally have a very low acceptance rate, right? So what exactly was it about your alumni that made you have enough faith in them to invest your time and resources to ensure they succeed?
It was the people. So I think a lot of companies, and I think every time we focused on looking at the business over the founders, I think those were not people that stuck to the program. They were not people that have continued to stay friends with the program. I think founders that I'm attracted to even now as an investor are people that can take constructive criticism well, that are always aware of what they don't know. So there's a sense of humility in terms of how they show up in the world. I think that they are hungry, they're gritty. Grit is the confluence of passion and determination. That's Angela Duckworth's definition. And I think, that sense of grit, you can't teach people that, right? So people are either gritty or they don't. So you can have, someone that comes from a tremendous amount of privilege and they may not be hungry to do something, right? Because they might have like a safety net there. And I've also had, people that have come from tremendous privilege, but are just so hungry to do and build something. So this idea of like grit, hunger, this idea of just like, being like humble and asking a lot of questions, but also being aware that when you get constructive criticism, it's important to listen. Those were traits that we actually looked for in founders. And I think over time, especially we iterated the program over, the course of the decade, we constantly refined that, right? And that became, because in our accelerator program, one of the biggest things that happens to you is you get criticism / feedback from over 50 to 60 people over the course of 4 months, right? And so you need to be able to not only take it, but you also need to be able to sift through what you're going to keep and what you're going to do away with. There's just a lot of thoughtfulness. And so I think we definitely looked for that thoughtfulness a lot. And I think that's how we always differentiated ourselves as a program.
Hey, as an early stage founder, you really do need to be gritty. You really do need to, put your best foot forward at all times. And, we did have a question about, founders and their impact on startups that we'd like to ask you. But before that, what are some of the skills that you think are absolutely vital for early stage startups to possess so that they can grow, right? And what kind of an education does I provide them so that they can hone these skills?
Yeah. And honestly, Mevish, who's our new CEO at Eye to Eye, I think can speak even more to this. She's actually one of our past founders, which is really cool. So she was the COO of Karpar, which on demand for beauticians, right? So was the co-founder there, is now the CEO of Eye to Eye. So she can actually speak to how the programs have all changed themselves a little bit. But I think that, I kind of spoke to this already, but I do think that, especially now as an investor, I kind of look for pattern recognition a little bit. So I definitely look for entrepreneurs that have really know their space, like really kind of dug in deep, got to like know their customers, their user base, like have that sense of curiosity. I think that curiosity to us is like a very important character trait. And those are things that we looked for even in the accelerator program, had a sense of humility. And then I think from that, it's like you start then from a leadership perspective, start building a team around you of people that you feel are the gaps that are missing, right? And then you have people that are constantly going to be using this idea of like speaking to their customers, getting feedback constantly, and that kind of lean startup methodology, right? And building that into your culture as an early company is really important, right? How do you kind of build curiosity, humility, like that sense of that, because those are the traits that are needed to build a company that's going to keep growing, and having that growth mindset, right? So a fixed mindset is when things don't change, like we're just going to look, this is the way the world is. A growth mindset is constantly thinking about, wait, what if we change this? Because I think every company, it's going to be inevitable early on that you're going to pivot, you're going to change something, you're going to iterate, you're going to tinker with what you're building. And I think it requires a high sense of curiosity, as well as the ability to listen and surrounding yourself with people that will do that. I think also finding really good mentors early on, having like a community of other like-minded founders. And those are the things that we actually, our program did too. So beyond the curriculum, the curriculum itself was really geared towards the lean startup methodology. It was like putting them in and understanding what good user research was, putting them out in the field and going out and testing hypotheses and getting feedback and seeing what it meant to actually iterate or pivot or persevere with their model of what they're building. They spoke to people on sales. They spoke to, we talked about growth. There was a lot of things in the curriculum that were geared towards like what happens when you're really at market and how do you actually achieve growth with your business. But I would say that the very first part of our program was actually about building community. And so every first weekend of our accelerator program, and we haven't run our physical accelerator since COVID. Inshallah, we'll do that this year. I won't be running it, obviously, Mevish will, but we would take our startups up to either we'd go up to Mari, Bourbon, like we've gone up to Kashmir before, like just in terms of a retreat that we do with just our founders, and the entire retreat curriculum is all geared towards leadership and all towards community building. And so the whole point of that is to kind of start to really kind of get to know them, for them to get to know themselves better as human beings, because I think that's really important, is like that leadership component of who they are as founders, but they also get to know each other really well. And I think building that cohort becomes really important in building trust, and then having the peers that you can rely on as you grow and you build, I think is really key. So those are some of the things that the program does. And I think from an investor perspective now, those are still the traits that I look for, Misbah and I both, as we invest in founders.
You talked a little about what like the fundamentals or the basic pillars that are required for a startup to actually like be built and these things. So do you think there are certain challenges that Pakistani startups in particular face that are wholly unique to them?
There's a lot that's not unique, to be honest. I think a founder anywhere probably faces very similar things, right? I think the so much of keeping the lights on, so much of like how do you get people to actually buy what you're building? And I think those are the same principles that exist. I think in Pakistan it's just so much harder. Like it's, we're in such a high friction environment of things just not being easy, right? Things shutting down all the time. There's like some dharna happening. So anything that you would plan, you can't even make it out there. Or like obviously COVID with all like the constant shutdowns that were going on, that happened everywhere in the world. But I think that in Pakistan, it's just so much harder. I think we have a regulatory and actual structural framework that makes it difficult to be an entrepreneur, right? So even for founders right now, there's a recent legislative change by the state bank to allow Pakistani founders, tax residents to set up holding companies abroad. But the process of setting that up is still so opaque. It's so difficult to navigate. Even when you're getting a bank account, it's just as a regular person, right? Forget like a founder, but getting a bank account is like just such a pain in the ass. Or like if you're a woman getting a bank account, it's even more of a pain in the ass. So it's like all these things that just make it hard to just do life are also make it that much harder to be a founder in Pakistan. And I think that's why, to me, I think Pakistani founders that have built really great businesses in the country, you know, some of the ones that we know about in the news, I think to me that the most impressive thing is they've done it in an environment like Pakistan, in spite of us being like that, not because of it, right? There's nothing that's been supportive of them. And so they've had to make it work.
Right. So over the last year, there has been a very big boom in VC as well as startup culture within Pakistan. So what do you think has changed over the last few years or even months? And how do you think industry leaders like you have contributed to that?
Yeah, and we're actually releasing our 2021 ecosystem study actually in a couple of weeks. So I've been kind of in the weeds editing the team's findings on this. So a couple of things have changed significantly. I think in 2021, as you guys know, startups raised $350 million in funding, which was 5.5x of what we did last year. That wasn't the result, to be honest, there was like a grounding that happened because of what was happening in the ecosystem. And I think that's really important: co-working spaces, incubators, accelerators, all of that. But really a lot of that was due to regulatory changes that have happened. It was due to all of a sudden, from a macroeconomic perspective, international investors, you know, all of a sudden having all this money that they could put elsewhere. They didn't have to travel because of remote diligence becoming a norm during COVID. So people were like, where are the last places where the prices aren't too high? And Pakistan was one of those places. And so, and I think that's continuing to this day. But I think what was really interesting was, for the first time, you know, if you look at the amount of funds that invested in Pakistan, it was just huge, right? Like a significant percentage of our deals had international investors in them. And most of those international investors have never been to Pakistan, right? And so the fact that they could do that, whereas before the biggest issues why international funds didn't put money into Pakistan was because, number one, they were like, oh, well, we're not going to travel there to do diligence, so I guess like we're just not going to do a deal there. Or they would say like, how do I put my money in and out? And being able to do it in a holding company in like Singapore, Dubai, or the US makes it that much easier, right? And so those are the things that started to happen. But then also on the founder side, right, we have like a huge amount of ex-Green kids that are starting companies right now. We have people that have worked now at Airlift and all these other startups that are going on, like by Kia, and going on to start their own companies. So there's just this really amazing environment of really incredible founders. And I think that sophistication and the standards went up significantly. And obviously, the ecosystem kind of being where it was, I think created kind of a cushion for all of that to happen. But so much happened that was very specific to last year, of kind of the founders, these amazing founders coming up while these international investors were doing the regulatory barriers going down, like the fintech sector took off, right, last year. So all of those things kind of all happened at once. And that's how we can kind of explain the last year. But it could not have also happened if, you know, some of the things that were put in place over the last, 10 years. But I think for me personally, I went from, the ecosystem went from like growing slowly to like all of a sudden taking off. And I think I was really happy to be on the investor side of things. I was no longer CEO of Eye to Eye, the company that I founded, as of December 2020. And so all of last year, I was already on the fund, but I was just this last year fully on the fund, and you have a front row seat and are part of that growth. And it's been crazy. It's been really fun to kind of be part of it.
Right. Kalsoom, you talk about international VCs, right? And it's true, much of the funding that came last year was from international or mixed investors, right? My concern is that, as whilst local investment has been growing steadily, right? Is it yet at that stage where it can drive and propel this unprecedented growth in the Pakistani startup ecosystem?
No, we're not even close to it. So tomorrow, if any of that money dried up, we'd have not enough local investment to take the whole ecosystem forward. So we definitely, and this is what we're writing about in the study as well, right? We definitely need to be encouraging more local angels. We need to be encouraging more local funds. I think that, most of the local funds on average have been, anywhere between 15 to $30 million. Some of the funds are raising their second funds right now. But a lot of these international funds are like $100 million funds. Like they just have so much more money, right? So, so we just don't have that yet, but I think it'll happen. But today, if that money went away, the international money, we would not have enough from a local standpoint to sustain the growth that we have in the current market.
Right. So, you do mention in other, podcasts that there's liquidity in the Pakistani economy, right? That we do have money to spend, except we as a nation, we spend it maybe on real estate, on cars. We don't spend it on startups as much. So, that's also something that I do not like about us. My question was, in some ways, have you sort of educated, people, have you sort of educated people as to, maybe the importance of investing in startups?
Yeah, definitely. I think that a lot of next gen of these like state companies, right? So a lot of these state guys are the ones that are more traditional about where they put their money, right? But a lot of the next gen have been really excited about what's happening and they just don't know how to do it. And so there is, a lot of opportunity, and we have been, working with them on, some of them are investors in us as a fund. And so they're learning through us as we're investing. They're like, okay, this is how you do it. And so and also like our team at Eye to Eye has been involved on the sister company side, has been involved in like angel investor trainings. We're going to be doing more of that this year. So I think there's, it's a very different asset class, right? So when I was mentioning state companies, like the state mindset is literally like families own businesses for generations, right? Like, so this idea of a company exiting or a company like growing really, really fast is not something that's been part of our vernacular before, right? So it requires like a re-education around that, but also we haven't had proof yet, right? There hasn't been that many exits yet in Pakistan. And so until that happens, it's hard to prove that. So what I always tell people, I was like, think about it as like you're diversifying your portfolio. If you want to put 10% of that towards startups, just so you can learn, and just so it's also money that you're afraid to park, because I think that's another thing is that people think I'm going to get an exit tomorrow. And obviously we haven't even had exits yet in Pakistan, but I'm like, always think about it as like a 7-year horizon, right? Or a 5-year horizon. Like put your money in, park it, see, and put the money in that you're not afraid to park for like 7 years, right? So I'm not saying, I think the thing is like, real estate is a good investment in Pakistan, to be honest. Putting your money in the stock market is a better, in a lot of ways, if we look at like the immediate returns, better than putting it in startups. But if you want to diversify your portfolio and be part of the things that are happening right now, what I always tell people is like, just say like, is that 10%? Is that 20%? Is that like 5% of my portfolio? Do that, right? And learn. And I think people get really excited by it. So I think there are people, a lot of like people that have been in Pakistan have been really excited about what's been happening. But I think they don't know how to be part of it. So I think that education, either passively through one of the funds that they've been part of, or like, through these trainings that are now happening, I think can create those avenues for them to learn themselves and also how to be part of it without also being onerous or being vulture-like, right? A lot of these guys come in and they want to be helpful, but they're taking 40% of a company or 50% of a company, which is not helpful, right? But they don't know because they've never done it before. So I actually don't blame them. I'm not vilifying people that are doing that, but I think it is important to do a re-education of what that means, right? Because they've never held a company through multiple rounds of funding. And so what is it? How does you taking 5% of a company rather than 45% of a company actually help the company in the long term? And those are things that is all part of education.
Right. In one of our podcasts, Rabil Varaj, who's the CEO of Sarmarkar, he said that when you take 40% from a company, right, then you really kill its incentive to grow, and that's, so basically, I think that education is necessary to, not be vulture-like, to let startups breathe and grow. And we do have a question for you, which will be a follow-up. But before that, there's talk of there being a cooling off in the international VC investment in Pakistan. Would you agree with this? And if so, like, what factors could bring about this cooling off, and how can we prevent it?
I mean, yeah, I think the factors are completely out of our control. So a lot of the cooling off is probably happening because of the macro environments, right? So inflation is up, interest rates are up. When we looked at the stock market has not been doing great, right? In some ways, you could say that means that maybe people will put their money elsewhere, but other ways it'll mean that there is potentially that cooling off. Pakistan, the devaluation is going to happen again this year. So there's a lot of things that are like, I wouldn't say it's a cooling off. Maybe I'm optimistic comparatively, right? Like I'm an investor in Iran, which is this amazing female first fintech. And Halima was like, oh, it's going to happen. Like, she's like, the cooling off is going to happen sooner rather than later. And of course, she's watching those trends really carefully as a founder, but also as like someone in a fintech. And I personally, I'm like, yes, that will happen. And also there's a lot of investors I've spoken to more investors who are strategically looking at Pakistan this year than I did even last year, right? And it's only February. So I think that, it could happen. And I think we have to be really mindful of that. So I think at the end of the day, what becomes really important, because I can't control and I can't predict fully what's going to happen. What I can say is that companies that are raising right now, they need to be raising smart. They also need to be building strong business fundamentals. They need to be thinking about their contribution margins, their unit economics. They need to be actually building businesses that work rather than businesses that are going to bleed money for years, right? And so I think those are the things that are forcing everyone to say, like, and that's always been the case with Pakistan, right? Even last year, I always said to our founders, I'm like, this could go away tomorrow. So you're not caught the book in India, right? So we're investors in Credit Book, which is like Caught the Book in India. It's like Caught the Book had years of luxury of never having to monetize their company. Like they just built user volume over time, right? But they have so much money in India, local money, as well as like in Indian funds that would just pump money into this company, right? And I was with Credit Book, they were like, they know that, right? They're like, we don't have that same luxury, right? If we can't monetize, we die if there's no investor there. So it forced them to think about that a lot earlier than like a Caught the Book did or a Bukukas in Indonesia. And I think even right now, like we're investors in Thaza, they're both I think they're both LUMS grads from MBA. Aliza Brar is for his MBA, but for them, like, Ninja Thaza is really similar to Ninja Cart in India. Ninja Cart, obviously has been growing really well, but like what's been really important for the Thaza guys is like revisiting the business fundamentals, right? Or like, does this make sense? Are we bleeding too much money? What do our contribution margins look like right now? Right. And so I think those are things that are becoming really important as we kind of, as the uncertainty of what will happens, which we don't know still. I think it's important for people to pay attention to that.
Right. Absolutely. I think Aliza would like to talk to you a little bit more about, how startups navigate the venture capital ecosystem. So Aliza?
Right. So early stage VCs are great at spotting promising startups. So what methods do they use to look for these startups, and what stages do they start considering a startup good enough to start investing in?
Yeah. So every VC is totally different, right? So some VCs, their sweet spot is pre-seed and seed. So they'll come in really early into a company. A company may have had a family and friends round as an example, or this might be their very first round of funding, right? So some VCs like us, actually, Indus is like this as well, prefer to come in early, right? Like I think because of the DNA of who we are from our accelerator side of things, we like early companies. And also because of the way the market has shifted, we come in quite early. We're oftentimes the first institutional check into a company, or in that round, one of a few institutional checks. Other early stage VCs, because it's still early stage when you're Series A, right? I just did an interview with Mamoon Hamid who's the partner at Kleiner Perkins, right? Which Kleiner Perkins is like the biggest. It's like 50-year-old VC fund. And he calls Kleiner is early, and that's Series A. So Pakistan Series A is later, but typically when we say early stage in the Pakistan context, it means seed, pre-seed. So some people prefer like just firmly seed to Series A. Some people prefer pre-seed to seed. So depending on where you enter, it then requires a different type of hat, right? So if I'm investing in a pre-seed company, which we just did, right? Like I'm closing a pre-seed deal right now. For me, always, it's founders first. It's actually building real conviction in the founders. And like, not only do they demonstrate that they have what it takes, like if stuff hits the fan, they're going to be able to figure things out, right? And sometimes that happens because I know the founders quite well, or I've just seen them. We do reference checks on them. Like the guys from Taza, the guys from Chuck It In are all ex-Kareem. Junaid Iqbalu is the ex managing director for Kareem Saudi in Pakistan, he's an angel in both of them. He's a good friend of ours. So I'll just call up Junaid and be like, what do you think of these guys? Like, what do you like? So you'll do like a test to see, and you can do stress tests even in conversations of how they are. Then you want to look at how well do they know their space, right? Like, I mean, you could be really, really great and smart, but if you really don't know the problem you're solving and you haven't taken the time to do it, you're probably not a fit for us. Like, I want someone that is geeked out so much about their space that they like eat, sleep, and dream it, right? Then what we look at is our opportunity, right? And so I think that's at pre-seed and seed, it's always founders first. And then the second, or at least for us, the second thing we look at is the market opportunity. How large is it? Is it really a venture play? Is it something that's more niche that might be more of an SME play, which is great. It could be a great lifestyle business, but maybe not a fit for a venture fund. So I think those are the things that you look at. The earlier stage you are, the less data points you have to go on, right? So sometimes looking at comparables in other markets is also really helpful. You end up just taking a bet. Taking a bet early is like, sometimes it's the question mark. That's the whole game of venture. It's like 9 out of 10 companies might not do super well, but that one is going to be the one that hits it out of the park, inshallah.
Just like a small follow-up to something you mentioned while you were talking. What's the role that social capital can play for these startups and their founders, especially considering, like, in Pakistan, at least, the community or the ecosystem for startups is very tight-knit and everyone sort of knows each other and what's going on. They're updated on it. So what role does that play in terms of looking out for opportunities for being invested in?
So sorry, could you repeat the first part of the question? What role does what?
Social capital play?
Social capital.
Yeah.
To a certain degree, yes. I think there is privilege baked into that. So I think that if you are someone that has social capital, you obviously have the privilege and the network, which is great. So I do think it does play a role. Pakistan is a very relational place, right? So it is based off of relationships. It is like, someone knows someone that can check on you. But if you don't have that social capital, there are ways to build it, right? Even if you don't, right? So it's entering one of these programs sometimes and getting to know people. It's taking the time to like grab coffee or see if you can message like, a Rabiul Waraich or myself or whoever, be like, could we like do a quick call? I would love to pick your brain about this. Some people may not have the time. Some people, like, we try to do these we try to host this on like constantly because I just really love meeting awesome young people. So sometimes I'll just like do like a 20-minute call with someone who has a great idea and I'll just want to give them feedback. So yeah, I think it's about building those relationships. And I think that even if you don't come already with that social capital, there are ways to build it. It's harder, to be honest. And I do think that is something that I critique a lot in our ecosystem. But I do think that joining some of these programs, getting to know mentors through those, building relationships from there, and just being constantly curious and hungry, I think can help you. I mean, I didn't have much of a network, to be honest, when I started eye to eye. And so much of it was just me. And obviously I come with privilege. So I'm also mindful that even though I didn't have a network, I also already had a leg up, right? But I also took the time to build those relationships. I think that was really important.
Yeah, so it's kind of like investing in yourself before you invest in your startup. Okay.
Definitely, for sure.
Okay, so moving on to the next question. What do you think are some red flags that VCs look out for during pitch meetings? And what are some of their reasons for believing that something is a red flag? Like, how do you identify these red flags?
Oh, so many. So, I mean, I think some of it comes sometimes down to the reference checks on someone, right? It's like, you'll hear about someone that, maybe just doesn't check out. They may be left a place multiple times. They might have a temper issue. They may not take constructive criticism well. You can view that a little bit in the calls that you're doing and the time that you're spending with the founders. I think the red flags are also like, is this, the stuff that you can't control sometimes, is this a highly regulated space? Like, is there going to be red flag? Is there going to be like things that pop up that we can't control? So we do a risk analysis of companies when we're looking at the opportunity. Those are some of them, but sometimes the red flags boil down to the people, right? And also I would say that I'm telling you about the founders that we like, Miss Ben, I like, right? And there is a bit of a mirroring thing. We probably have very similar traits to the founders that we like to invest in. So I'm probably not going to want to invest in someone who's like a super arrogant dude that like really believes in the stuff he's doing. But some of my male colleagues may love that, right? Like that sense of confidence and cockiness. They were like, that works. That's like what we want to invest in. And that's just for me, like it's super triggering. I don't really love that at all. That's like a red flag, especially like working as a female investor with them. The dynamic is already interesting anyway. And so I was like, am I going to be able to be their investor? Are they going to even respect me? Those come up too.
Do you think like for these leaders and like founders of these startups, there can be great leaders, but they may not have like the technical skill required or vice versa. So what do you think is more important? Like, can you make a trade-off of one for the other? And should you be doing that?
Yeah, I think oftentimes we do in Pakistan a lot, right? I mean, a lot of times founders don't have a CTO as an example. So I think what I look for is like, what are they recognizing as the gaps from a talent perspective? And how are they planning to fill that, right? Like, do they have ways that they have like maybe someone that's planning to be a CTO, like a fractional CTO, like 1 to 2 hours a week right now as they're building. Also their ability to like, if your ability to inspire people also is your ability to attract good talent, right? And so that also plays into it, right? So Credit Book is a great example. I mean, actually a lot of our companies are this. I don't even want to call one out, but I would say Credit Book is really good at building culture. They're super mindful about it. Like they're really good at attracting talent. Their head of data sits in Italy. He's like an Italian dude. And I just met him in Karachi. He's like this Italian guy sitting in Karachi because he came to be there with the team fully. And that ability to attract that talent takes like, you have to be inspirational. You have to be aspirational. Iran is another great example, right? Halima and Farwa are just two badass kick-ass founders, and they really the team that they've built, I've interviewed some of the people that they've hired. They're just really thoughtful about how they hire and build. And so yeah, you can have gaps, and that's totally fine. Like I'm not expecting, especially early on, you're not going to have like a fully fleshed out team, but it's more about what the strategy is for bringing in other people, and also our thought process on, do you have the ability to attract that talent? So
yeah, I feel like a lot of like startups in Pakistan are perhaps like not at the forefront in terms of their HR as of yet. I don't think it's as developed. So I think a lot of them face those problems, especially if they're not able to get that level of growth in their early stages. But that
for sure. Talent is like one of our biggest challenges in the ecosystem, period. But I think that a lot of founders, also it's a problem. Sometimes founders like, and it is like, I think ultimately every one of us who's ever been a founder has like probably some narcissistic tendencies in our head, right? Like we had the thought process that we had the audacity to believe that we build this, right? But I think it takes a level of humility to say like, I can't do everything myself, right? So I've definitely seen founders that have micromanaged and not wanted to give away power. And those have been really unsuccessful at building companies, right? Because you build really toxic environments as a result. And so there's some really great books out there about like building healthy organizations. And I think those are really important to read. Those are important to pay attention to. There's a few folks working on the talent problem in Pakistan. I think Sultan Shahid from Gamai is awesome in terms of helping to build hiring and things like that. But the way he thinks about stuff is like so great. So yeah, I think that's a general problem in our ecosystem though.
Hadia, do you have any questions?
Yeah, just like generally exploring the power dynamics between a fund and a founder, right? So in a Mina Bytes article, I2I Ventures stated that they aim to challenge the traditional power dynamics of a fund and allow for founders to have as much power at the negotiating table as the investor, right? So I just wanted to ask, like, what sort of a power difference exists between founders and investors generally?
I mean, it's natural, right? Like someone has money and you don't, like there's an automatic power differential there. what I've seen happen in the last year, though, is a lot of founders have had choice. Like they don't have to take all the money that's on the table. They can take someone else's money, right? So I've definitely seen the power dynamic shift as that's happened. I think for me, the very basic thing is like treat people just like human beings. Like they're not like your pawns to go like do all your stuff, right? And I've definitely seen investors in our ecosystem that act like such, honestly, a-holes in negotiation. And I'm just so turned off because I'm like, that's like you're setting the tone for the entire relationship, dude. Like, that's what you're going to lead with. And so we have a very strong reputation thing in this market where the minute you behave that way, especially now as founders don't have to take everyone's money. I've definitely seen founders be like, I don't want to take money from X fund because they have this reputation. I've heard this from another founder. So I think that, it's not to be founder friendly is everyone claims that they are, but genuinely it's about how you just treat people, right? Like at the end of the day, the way I always see things is that I am honored to be part of someone's company. Like it is my honor to be part of your journey. In that, even me framing it that way means that I am on your side. I know this is a marriage. Sometimes things get a little bit hairy in any negotiation, but it's about how you talk things out. It's about feeling like you're in their team. The Thaza founders, when they announced their first round, they called Miss and I their honorary co-founders. And it's because like literally every other day they were messaging me, like they were applying for something. They were like, can you read this video? Can you watch this video and give us feedback? Like we were doing, we still talk to them constantly. Right. And so that's the kind of vibe that we like to have. But I've definitely seen opposite things where there's like power thing of like, I'm just going to show up 45 minutes late to a meeting. And it's like, for me, it's like, this is not okay as a human being to do, let alone as an investor. Right. And so I just know that that's not how we treat people. And then I think if you do treat people that way, I think that power dynamic, people don't have to take that anymore right now in this ecosystem.
Right. So, we talked a little bit about the state culture in Pakistan and, how they're used to taking a lot of the shares. But, I just wanted to ask, whilst I understand that I2I is founder friendly, sometimes other funds may not be, right? So I just wanted to ask, like, in what ways does this like power difference manifest when negotiating, the shares?
Yeah, I mean, you'll see like an offer come up on the table where, you're being asked to give up a lot of stuff. Some of the terms within that in terms of, like clauses that are in there that are like just really kind of crazy terms that happen in a term sheet. I think oftentimes early on, and this is what I sometimes tell people, safes are so much easier. Safes are basically a simple agreement for future equity, right? Safe agreements are typically like 4 pages long. They're super simple. You don't have to negotiate that much. You're basically giving them an offer based off of, a cap, which is not even an actual price, right? And so I think that with, what I typically do see is like the negotiation gets a little bit hairy because we're all going in there asking ourselves, like, we're not going in to protect the founder. We're going in to protect ourselves. Like if something happens, if you're doing a regular term sheet for a price round, right? If something happens, like, and so you'll have all these like clauses, like if the founder decides to like sell the company and buy land, right? Like how you have like a trump card to say, no, you're not allowed to do that. Right. But then it kind of gets into a slippery slope because there's every hypothetical out there that a founder could do. And so you can put that into the term sheet if you want. And so it's kind of does boil down to like just having open conversations and trust. I always find personally, and I love the lawyers that are out there. Mabar Siddiqui, if he's listening, he's like one of my dearest friends. But sometimes when you have lawyers, just lawyers speaking to each other or just the lawyers there, it automatically becomes like not a human to human conversation. So sometimes what we like to do is we'll just, if it's a regular term sheet, when it's safe, it's like super easy, but if it's a regular term sheet, we'll just like get on a call with the founders, just us, and explain our thinking around it so that they're very clear on why we were coming up with some of these things. And if some of the communication breaks down, it breaks down. But typically when you have your lawyers there, it breaks down a lot faster. So.
I mean, absolutely. It's so essential to have a lawyer because power dynamics, they do always come into play sometimes. So, I think if there's one takeaway for the young people who are maybe thinking of starting their own company, it's, to it's to sort of learn how to navigate that power difference, essentially. And you're very right about lawyers, definitely we need lawyers in every situation.
I think there's also a very big deficit of just mentorship opportunities within Pakistan, and even the ones that exist may not be accessible by individuals in like more isolated or more like in areas that are more like on the fringe of just like centers or hubs of like work and startups. So how can we overcome that, and what sort of opportunities do you think like startup founders within Pakistan itself can have internationally?
Yeah, I mean, so much of it, there are opportunities. Like our sister company has run a number of programs, right? So there's, we've run programs with Facebook recently. We're running a program with the World Bank right now. There's a huge amount of opportunity to apply, leverage that to get access to those types of mentors. Catalyst Labs has like a specific program just for for women specifically that are looking to do that. So there's a ton of stuff that's out there. If you yourself want that, and I mean, I built my own mentor network, right? When I was starting out, I mean, I actually think that I designed our mentor network because I was like, if this didn't exist when I started, how could I design this better for people so that they have access to more people? But I mean, I just had just really loved people that were out there that I was like, wow, you're kind of amazing. And I know you must be super busy, but like, if you have 10 minutes, I'd love to pick your brain. Right. And that continues to this day. Like Mispa and I have like friends in our community that are literally other investors that have been around for much longer than us. We're in a community of other female general partners from all over the world. Honestly, everything is so global right now and so easily accessible that I sometimes just would message people and be like, hey, I would love to grab a coffee, or hey, would you be free for a 20-minute call? Be specific about what you're asking for. So I personally hate open-ended conversations. Like if you're just going to be like, I just want to pick your brain, I'm like, what are you picking my brain about? Like, how can I be helpful for you? Right. And so I always advise people, like, if you are sending me a call, if you're sending me a note and you want me to like give you feedback for 20 minutes, you're like, I am working on X thing, or hey, I would really love, like, I'm, doing an interview for the first time. I'd really love your feedback on this. And that's great for me, right? I'm super happy to do that for most people. And that's something that I do on a constant basis still. And I think it's really important to say that there's just so many people out there that actually are quite generous with their time. And a lot of people that live their lives, I live this way, of paying it forward, right? There's so many people that got me to where I am today and continue to get me to where I'm going. And I feel a sense of responsibility of paying it forward. And I feel like everybody else is doing it for that reason. And so to the point of mentorship, there are programs that are out there if you want to even do it yourself. Like as an example, when Clubhouse was cool, I was on Clubhouse, and Nir Ayal, who wrote the book called Hooked about product, right? Literally how we build sticky products. He's someone all of our companies that we've invested in are obsessed with, right? They love his book. They read it for about their products. Randomly went on stage on Clubhouse and literally just asked him a question, told him I'm an investor in Pakistani startups. And then he was like, wow, you're really cool. You should send me an email. I was like, I will send you an email. And I sent him an email right away after that. And he ended up doing an AMA with all of our companies, right? And was lovely. Like he was such a nice person and so generous. He gave like an hour of his time, right? And that's similar with other people that we've done that with. So I think a lot of people feel like nervous or apprehensive about it. And I think it's really important to say that a lot of people are sometimes just waiting to be asked specifically. So.
Right. So do you think that there's like an intersectional problem also that exists within Pakistan in terms of access to these resources to found startups, especially like for women? So only 1.1% of the startups that raised funding in the last quarter of 2021 were female owned as compared to 66.4%. So do you think that what challenges do you think are like female specific, and how do you think all of these like problems compound to produce like barriers or hurdles of entry into the ecosystem?
Yeah, I mean, I think that, it's a similar point of what I was making before. I mean, I think that there's so much that's out there that's for free, to be honest. Like you can go on YouTube and basically find like a gazillion stuff. And some people that I've met today are like people that literally come from like very humble backgrounds in Pakistan, but literally just learn shit on YouTube, which was awesome. I was like, that's so cool. And like just reached out to people, messaged people. There's the guys that like they recently raised money from Hustle Fund, and they literally just like reached out cold, right? And so I think that's the thing. Sometimes with women, we have a sense of being polite. I think we've been conditioned that way of like, don't like, just like, don't, speak out of turn, like don't, whatever. And I think that's men don't have that issue. They just are very bold in asking. And so sometimes I always say to women, just like, don't be afraid to ask, right? It's your right to be able to ask a question. People can say no. That's the worst that can happen, right? People can either not respond to you or they can say no. Or if they say yes, it's like, amazing. And I think that, there is like a sense of barrier to entry that sometimes I see with women too, with like, there's a lot of real barriers to entry when it's, especially for women, when it comes to building a business. There's a lot of real unconscious bias that exists when it comes to fundraising for women. And then sometimes I'll just see women just not opt in, right? They just won't want to put their hats in the ring because it's, they're like, oh, I never saw, like you see men sell the shit out of each other, right? And like, and out of themselves. And like on LinkedIn, it's like, I am X thought pioneer of whatever, versus women will always tell you exactly who we are and what we can do. And I think sometimes, I was like, don't like oversell yourself, but sometimes it helps to learn about selling yourself a little bit better, or not being afraid to put your hat in the ring, right? And having that courage to do that. And so sometimes it requires being in a community of other women, other people that push you. And I think that's super helpful. So for women seeking, like have peers that are building similar things. Like when I was first building Eye to Eye, I joined a community called Sandbox, which was this amazing global community of people doing cool things who are under 30 years old, right? And that community of like men and women have now become, some of them have become still to this day, some of my best friends in the world. But I don't think I would have launched Eye to Eye if I wasn't part of that community, because I just had people around me that were building such cool things. And it gave me the audacity to believe that I could do it too, right? So sometimes surrounding yourself with people like that, and honestly, in the world that we're living in, so much is virtual, right? Like you can find those communities really easily online, and you guys are part of a generation that exists pretty seamlessly. You guys are digital natives that exist seamlessly online. So there's a lot that you can discover and find.
Yeah, so, Kalsoom, it's really fun talking to a female VC, because sometimes we just feel like you say what we wanted to, what we've always been wanting to hear. And when you talk about men selling the shit out of each other, right? That's true. There's a lot of this bro culture, and there's a lot of this, ye to mera bro hai, he's amazing, right?
Totally.
So very hand holding and all that. But I just wanted to ask, like, you talk about how women should pitch themselves, how women should really put their best foot forward. So do you have any tips for women who've maybe been conditioned to be more passive in discussions?
Yeah, I mean, you get really nervous the first time that you're like I still remember I would get like, my hands would get like sweaty before I'd be in this like the big environment classroom and have to ask a question. I was like, what if I'm wrong? Like, what if I sound stupid? Versus like sometimes my male guys next to me would like say the stupidest things with so much confidence. And I was like, I thought about what I was going to say out loud before I said it out loud like 60 times. So I think sometimes you just have to do it. Like, it just literally means that when you show up in a room, if you show up to like an event, I always notice this, women always sit on the edge. They never sit at the table. I was like, be very conscious of these moments that we always are like giving space to other people. It's how we've literally been socially conditioned our entire lives. Take that space at the table, right? And then that becomes a metaphor for every single thing, right? It's like, it is yours to take. And so what I always tell people is when you're pitching, it is aspirational, right? And investors really vibe with people who are aspirationally building something. So don't just tell it like it is. Tell us the story of what the vision of what you're building, right? And I think that's super important too for women who are pitching, is like, paint the world that you want to see out there, and help us get excited about that, right? And so I think that's really important, is something that I always tell people is like, you need to have 110% conviction in what you're building. That needs to come across to people, because if you don't have conviction in it, then how am I supposed to have conviction in you? And so those are the things that I think are important as tips. But the littlest tips are literally in your brain, starting to catch yourself when you say, I say sorry all the time, as an example, right? All the time. And it's not even like I'm sorry for something. I'm just like, oh, sorry, I just wanted to ask a question. No, like I catch myself doing it, and it's like, don't be sorry before you ask a question, just ask the question, right? And so, and I'm, I do it still, right? I'm very apologetic about things. I'm super polite, like, but I think the guys in the ecosystem know this. I can be a total like bitch sometimes if I don't agree with what they're doing, or if I think that it's wrong, right? Like, so I'm not afraid to stand up for myself. And so, and that was something that I had to like build that muscle over time, because no one was going to stand up for me. I had to stand up for myself. So, and that's important for people to remember.
Yeah. Kalsoom, a little bit about funding, right? So one of the startups in your portfolio, Taza Technologies, they raised $6.5 million in pre-seed funding, right? Which is the largest sort of amount raised. So, I mean, how exactly did they do it, and how can other startups emulate that?
You should actually interview Taza on this call. They were pretty great at fundraising. Honestly, so just to backtrack, I don't think it's important to be the largest pre-seed or largest. I mean, Truck It In that just announced last week is like one of our companies, the largest seed. And I don't really honestly give an F about like if a company has raised the most amount of money. It's more about what you're planning to do with it. With Taza, what became really, really good was that because they are genuinely good, right? Like they're not building, there's no hype there. There's no smoke and mirrors. They genuinely are good founders that are building a good business. But then there starts to be this FOMO cycle that happens, right? Of like, investors that heard about Taza and, oh God, the round is done, right? So sometimes it's about like, the original round, if you look at the news, was 2 million. That was what we invested in. We doubled down in their most recent the recent round 6.5 was like the extension, right? So altogether it was 6.5. And so that they just basically, there's two things that you do. If you're raising on safes, it's a cap. So you just create a higher cap. So then you don't get diluted when things convert into a price. Then you also give room to people, right? So it's actually saying like, okay, we have a little bit more traction now. We still have the pre-seed is still open. People can be part of it. And so that's, if you look at Taza's announcements, there was one a couple months ago before there was one in like, I want to say October or September, and then there was one in December, right? So I think and it was all part of one round. So I think that it's important to kind of build momentum. You have to create, even if it's like, if you have to create a sense of FOMO. So I'll say this, I have sometimes I'll have feedback calls with founders that I say no to. And I always offer, I'm like, especially for ones that I really like, I'm like, I really liked you. If you want time, I'm happy to give you feedback on this. And what I always tell people is that like, when you're raising funding, I have like 10 to 20 companies that are pitching me every single week, right? So while you might seem really exciting in that 1 hour that I've spoken to you, if you've let me like trail off and go talk to 10 other companies, I will have forgotten about you, right? But if you constantly send me communication, if you are like, hey, you're part of my monthly update right now, here's something that's going on, here's how much we've done in the round. And I do this when I fundraise for our fund as well. That's how you start to create like a sense of like, there's a constant sense of connection. And I think that's a really important thing, is like, how do you create that constant connection to the investor that you're speaking to?
VCs do like to invest in up and coming sectors such as fintech, e-commerce, and logistics, right? But for example, about sectors that are not so prominent, right? Like one of the startups in your, that was your alumni, the Mad Hatters. They were,
yeah, that was in our accelerator, not in our fund, but yeah.
Yeah, like in your alumni, in your accelerator, right? So how do these like startups that target sectors that aren't fintech, e-commerce, and logistics, how do they raise excitement in VCs?
You don't have to raise money from VCs. So I think the very first question is like, not every deal is a venture capital style company, and that is okay, right? Like, I think that is totally fine. You should raise from angel investors. You should raise from like impact investors if your deal is a little bit more impact oriented. There's other types of capital that you should try to leverage. But I think the very first question you should ask yourself is like, is this deal a venture deal, right? And with Mad Hatters as an example, I love her. She's awesome. And she was part of our accelerator. I would never invest in her from the funds because she's not a venture deal, right? But from the accelerator perspective, I did put her in front of angel investors who may really love the story she's building around travel and sustainable and thoughtful travel. And as like, I'm a customer. I'm someone who loves what she's building in a heartbeat. She's not a fit for my portfolio, right? So I think the very first question you ask yourself is like, who am I a fit for? And we only sometimes attach success metrics to venture, and that's not the case because not every company is made that way, right? And that's totally fine. And so know who you're going for. And a lot of times those investors will go for angel investors, will go for sectors that maybe are overlooked. They have a little bit more patience with it. I think venture, especially in our market right now, is very much focused on e-commerce, logistics, and fintech, which to better or worse, right? It means that some plays in health tech have had a hard time raising, some plays in, ed tech, like it's there as like next sectors, but yeah, not as much.
Just to like wrap this up, for those in the LUMS student body looking to work in I2I one day, what advice would you give them, and what does I2I look for in its employees?
So the fund side or the sister company side? Because there are two different companies.
I2I Ventures and the accelerator.
I can give you both. I think the cultures are similar. I think on the sister company side, that's where they do the support programs. That's where they do the research team works there. So there's so much opportunity. I actually work a lot with our research team. So there's a lot of overlap with the fund and the research team. So I think that for them, I think we just look for people that are super excited and want to work places, right? I have a call later today with someone who just reached out to me. He's just graduated college and is excited about the research team. On the fund side, we tend to be a little bit more specific. So, we look for investment analysts, associates, people that have worked. You don't have to have worked in a fund, but like, Aliza on our team, as an example, worked in public markets before. So it's a little bit more specific, but we always have fellows. And right now, one of our fellows, he's at Harvard Business School, Saad Hirani, he's from Grouchy originally, but like went to Berkeley and then he's at HBS right now. And awesome. Like he's like such a kick-ass fellow. He's been working with us throughout the year. And so while he's at school, he's doing stuff. We've had Shamir from LUMS. He was there with us last summer, one of my favorite people I've ever worked with, right? And basically did a lot of research. He worked a lot with our ed tech company and did a lot of research as we were gearing up. They sat in on investment committee meetings. So there's always opportunities for fellows, even if we're more specific in some of the jobs that we're looking for.
Right. So Kalsoom, thank you so much for answering every single question that we asked. I know you have a very busy schedule. It was amazing talking to you because you've really been in the startup ecosystem since like the very beginning, right? So one of my key takeaways would be to just, put your best foot forward, pitch yourself, create, try to grow. Aliza, what do you think your takeaway would be?
I think it's really about making sure that you're looking out for opportunities yourself and you're able to go past like any sort of like competition, or like, I think the self is your main hurdle. And once as at least like a female would want to be a part of a startup or would want to be a founder, I think that's what has been the key takeaway for me. So thank you so much for joining us and taking out time. And thank you. We hope like this is helpful for others as well in the student body and LUMS.
Sure. Thanks for having me.
Thank you so much. Allah Hafiz.